Good morning, students. So we already discussed analysis of financial statement, common size and comparative. Okay. So now this chapter, this video is very important chapter, that is called accounting ratio. This accounting ratio very interesting chapter. It's very important for our project also. So later I'll explain for the project. Now we're going to discuss for what is the meaning of accounting ratio, objectives and advantages and our limitation, and finally types of accounting ratio. Okay, that's what we are going to discuss. Very important chapter this. Please kindly you have to see very carefully. Okay, so here what is the meaning of accounting ratio? See, accounting ratio is nothing but it is a mathematical numbers calculated as a reference to relationship of two or more numbers. Okay, that is very important, and can be expressed. How it is expressed? It can be expressed in a four way. So one is fraction. Okay, fraction may be 1/3, 2/3 like that. Then proportion. Naturally, what is proportion? You know. So 1:1, 2:3, 4:5 like that. Then percentage, that you know already. And finally number of times. Number of times whether 1 or 2 or 3. Okay, that's what's very important. The accounting ratio, whoever going to become a businessman in future, they definitely should know this chapter. Very interesting, very important, but it is very common sense and common logic. Okay, so only the mathematical calculation. Okay, so everything this formula oriented. Here again, when number is calculated, see here, by referring to accounting numbers. Okay, so derived from the our financial statements. Okay, so it is termed as accounting ratio. So I repeat once again, what is accounting ratio? When numbers is calculated by referring to two accounting numbers derived from the financial statements, it is termed as accounting ratio. That's what the introduction of the accounting ratio. Okay, so now coming here, what is the objectives of ratio analysis? Okay, here ratio analysis. Okay, so here definitely as a accounting ratio, what is the main objective? The first objective, to know the areas of the business which need more attention. Okay, so whenever the business, we should know which area is very important, so how to concentrate and what is the need, requirement of need. Okay, so accordingly your attention will be more. We want to know where we want to show more attention. Similarly, to simplify the accounting information, see here, accounting information, it's very important. How to simplify? So as a fullest of profit and loss account and balance sheet, as a statement, so you have to take time to understand. But here as accounting ratio, some ratios once you calculate it, you can understand very easily. Or the based on accounting information, how to simplify. That is the main objective. Third one, you can determine liquidity. Here what is liquidity? Our day-to-day activities, our working capital, our short-term payment. Okay. Similarly, our long-term solvency of the business. Long-term, our repaying capacity. You want to know how long it will take time to repay our long-term dues. Okay. Here, our assess the operating efficiency. Here, our operating efficiency of the business. We want to know our efficiency. We want to assess where you are, whether you are going right path or not, based upon the accounting ratio. Then to analyze the profitability of the business. Okay, so very important, profitability of the business, whether our business is going on. Accordingly, we are going to discuss the some ratios. So whether our earning profit, what way you are earning profit, of position of the company, the profitability is very important. Correct. So you are running the business. Okay, naturally business are going to earn profit motive. Okay, according to profit motive business. Then here to help in comparative analysis. Okay, comparative analysis. You have to compare maybe inter-firm or intra-firm. Okay. Later on explain what is the meaning of inter-firm and intra-firm. So that's what here accounting ratio is a very important ratio for our project. So please each and every discussion kindly go through this. Okay. Now we are going to discuss for our after the meaning and objectives. Now we are going to discuss advantages. Okay, advantages. So now the limitations of ratio analysis. Okay, so wherever advantages, limitations also there. The first important limitation, the false result. So what is the reason it began here false result? Because based upon the financial statement, suppose sometimes it is not true and fair, so naturally the output analysis will be different. It will give you a false picture of the affairs. False picture of the affairs. The way how you are giving, so true and fair. Only the preparation of the accountant, the whatever the auditor, they should give the true and fair. Otherwise, the statement is not true and fair. Naturally, we will get the false result. Okay, based upon that, our accounting ratio will vary based upon financial statement. That's what the first limitation. The second limitation, the qualitative factors are ignored. See here, we have only discussed quantity. Okay, only the quantity factor. Only the quantity factor. Okay, so here no qualitative factors are ignored. So only the quantity, how much our sales, what is our purchases, what is the expenses. Okay, here the quality is ignored. That's why the second limitation. The third limitation, the lack of standard ratio. There is no standard ratio. The ratio is different ratio discussed. There is no standard ratio. Okay, so may not be comparable. This is very, very important. So we can't comparable. Okay, because different firms to follow different accounting policies and procedures. Okay, different policies and procedures. Okay, one company will follow one policy and procedure. The other company can follow other policy and procedure. The best example here, say depreciation. One company will already discuss in +1. Okay, the depreciation chapter. Okay, here one company will do the straight line method. You know how to calculate straight line method. So other company will follow diminishing balance method. They also called WDV, return down value. Okay, so from like this, the method also very difficult to compare from one company, one firm to other firm. That's what they are telling you here. Comparable is very, very difficult here. Okay, so if you follow the same method, okay, easy. But different company will follow different method. Naturally, comparison is a question. You can't compare. Okay, then price level changes are not considered. Okay, whenever change in price level affects the comparability of the ratios. Okay, so standard price okay, but keeping on price changes. So naturally the comparison you can't get it. So according to fluctuation of the prices, comparison also will vary. That's why one of the limitation. Then window dressing. So very, very important, window dressing. What is window dressing? So meaning is nothing but manipulation of accounts. Okay, according to requirement. For example, banker you want to get loan. So based upon your information you can manipulate. Then you go to the bank getting loan. Okay. So now you will get the manipulation of accounts. Okay. So accordingly you try for the loan. So we can able to manipulate. That's why the window dressing. So we can change our statement. That is one of the limitation. Then finally personal bias. Here what is the meaning of personal bias? As a different people may interpret the same ratio in different ways. Okay. Same ratio, the ways will be varying different way. Okay, that's why according to the independently they can do. Different people will do different method for the same ratio. The application will vary. That's why the limitation. Okay, so I repeat once again. The result will be false result. If you are not giving true and fair, the natural result will be vary. Then similarly your qualitative factors not displaced here. Only the quantity. Here qualitative you can't get it. Then here comparable. Because of different method. Straight line method, I show the example, diminishing balance method or return down value. Okay, so based upon the method will be vary for different company. Comparison not possible. And price level changes. Okay, keeping on changes price level. The comparability of ratio is very difficult to get. Then window dressing. You can manipulation of the accounts. So once you manipulation of accounts, so comparison is very, very difficult. Then personal bias. Different people will follow the different ratios for different way. Okay, that's all the limitations. Now the classification and types of accounting ratio. So very, very important. Now the types of accounting ratio. So types can be classified into 4. One is liquidity ratio, solvency ratio, activity or turnover ratio, profitability ratio. Okay. So that's what the 4 classification. So liquidity ratio based from our balance sheet item, liquidity and solvency and activity. These are all mostly for the balance sheet. This profitability, you know, already based from our income statement, nothing but profit and loss account. Okay, that's what the idea. Here, what do you mean by liquidity ratio? So the ability of the enterprise to meet its short-term financial obligation. So for that, you want to know whether our company is able to repay our obligation. So the first important ratio, current ratio. Second is quick ratio or also called liquid ratio or acid test ratio. That's why in our main exam they will ask what is the other name for liquid ratio. You can write quick ratio or acid test ratio. Okay, so quick ratio, another two names. One is liquidity ratio, asset test ratio. Okay, liquidity ratio is very important. So our other subsequent classes we're going to discuss one by one. Okay, that's all liquidity ratio. Now, solvency ratio. See here, what is solvency ratio? To assess the long-term financial position of the enterprise. You want to assess whether our company the right way, or position of the company, or financial position for the long-term financial. That's a solvency ratio. So here totally five ratios. One is debt to equity ratio. Equity means our share capital, our long-term borrowings. Okay. So debt to capital employed ratio. Third one is proprietary ratio. Fourth one is total assets to debt ratio. Okay. So based upon our total asset, what is our debt? Okay. Interest coverage ratio. That's our detailedly our subsequent classes going to discuss what you mean by solvency ratio. I repeat once again, solvency is our, we want to know long-term financial position of the enterprise. Okay, that's our second important classification, solvency ratio. Now third one, accounting or our turnover ratio. So our company turnover, okay, shows how efficiently the company is using its resources. Okay, availability of resources, how company can able to do. Based upon we will understand the activity or turnover of the company. So first one is inventory turnover ratio. You know, inventory already nothing but stock. Okay, the position of the stock, inventory turnover. Then trade receivable. Trade receivable nothing but our sundry debtors and bills receivable together. Then trade payable. So naturally we have sundry creditors and bills payable. Then working capital. So working capital nothing but difference between current assets minus current liabilities. Later on we will discuss what is current asset and what is current liabilities. Okay. Then investment turnover ratio. Nothing but investment on net assets. Okay. Finally, fixed asset turnover ratio. So totally 6 formulas, very important 6 ratios going to discuss under activity or turnover ratio. Then profitability ratio. I said how we will calculate profitability ratio based upon our profit and loss statement, nothing but our income statement. So the firm can be measured by its profitability. Okay, what way they measure ratio based upon our sales, purchases, cost of goods sold, like that. Okay, so gross profit ratio, you know already when you prepare our final accounts from the statement, you know to prepare the gross profit ratio, net profit ratio. Here only the operating ratio. Okay, operating ratio. Here operating ratio, here operating profit ratio. Okay, later on you will become confused. Discuss detailing. What do you mean by operating ratio? What do you mean by operating profit ratio? So later on don't become confused. Okay. Then return on investment ratio. Earnings per share, we will call EPS. You see our newspaper, majority of our famous company, they will say, they mention earning per share. When you read the newspaper, you know EPS, earning per share. Okay. Dividend payout ratio. So as a company, they definitely declare dividend. You know already there are 2 types of dividend, correct? So one is proposed dividend, other is our interim dividend. Okay. Here we have to identify our dividend payout ratio. Finally, price earning ratio. Okay. So our earnings, PER. Okay, price earning ratio. But here totally 8 ratios. So again, so here that's what our liquidity ratio. There are two formula. Here maybe 5 formula under that solvency ratio. Then here activity or turnover ratio 6 formula. Here maybe 8 formula. So apart from that, totally see 2 plus 5 7 plus 6 13. So 13 plus 8 21. Okay, almost 21 ratios. Apart from this, 15 ratio is very important. Okay. So here this chapter accounting ratio, the formula, everything is based upon the formula oriented. How to calculate current ratio, quick ratio, like that. Debt equity ratio, inventory turnover ratio, gross profit ratio. Under the 4 important liquidity ratio, solvency ratio, activity or turnover ratio, probability ratio. So you should know what are the types of the ratio. You should know the meaning of the probability ratio, what is the probability ratio, what do you mean by liquidity ratio, what do you mean by solvency ratio, what do you mean by activity or turnover ratio. That's the detailed discussion here. So overall this here you should know how to memorize the formula. Okay, that is very important. So the techniques we discuss later, how to memorize the formula, how to do the problems. Then accordingly I will do the work based upon the information. Okay, so that's what we discussed today's class. So very important. Our 5th chapter NCERT accounting ratio. Discussed our meaning of the accounting ratio, then objectives of the accounting ratio, then advantages and limitation, and finally, the types or classification of accounting ratio, the four classification. Our next class onwards, we'll discuss about each and every topic. We're going to start liquidity ratio, what is current ratio, and what is quick ratio. Okay, which now we'll discuss. Okay, so blindly go through NCERT book. So again, I'll tell you here this chapter is very important. Based upon this chapter is our accounting ratio analysis. Now we are going to see advantages of ratio analysis. Okay. So based upon the accounting ratio, what are the advantages? The first advantage is a very useful tool for analysis of financial statement. Okay. So for financial statement based upon accounting ratio, we can analyze. So we will helpful especially for the bankers. So bankers will see the statement through the accounting ratio. They will think whether they have to provide loan or not. And similarly investor will think whether to invest to the companies or not. Then creditors can understand the company can be able to pay our debts or dues. Okay. So based upon the ratios, they come to the idea for the accounting ratio techniques to understand the companies. Okay. And second, very important, simplifies accounting data. So this ratio will give the simplifies. So maybe it simplifies after you can summarize them. So you will see the systematic idea. Okay. Accounting data to make it understandable. Okay. So meaningful. With the biggest statement, with the accounting ratio, we will understand the company performance. Okay. Then useful in assessing our operating efficiency, that is very important. See, operating efficiency of the business. Okay. Based upon the ratio, whether company will growth, we can understand company's growth, whether improved or not. Okay. So we can assessing the financial health, the company's financial health, the equity level, the repaying capacity, then the accounting shareholder, the declaration of dividend, all. Then performance of the enterprise. So every year whether they improved or not when compared to last year and current year based upon the accounting ratio. That is one of the important advantages. Then here useful for forecasting. Okay. So what is forecasting? It may be we can see the guide for the future planning. Okay. In future we have idea for the, based upon the statement through accounting ratio, we can forecast the company's future. Whether we have to increase our capital or not. So where we have to get loan out. For the future planning, we can plan accordingly. Then useful in locating the weak areas. Okay, we can easily locate weak areas based upon the accounting ratio. So where we are very weak, attention to the weakness. We can pay attention, weakness, weak part. Then accordingly we can take remedial action based upon the weakness. We have to take action. Okay, that's really helpful for our accounting ratio. Then finally, useful in comparison. I said it will be helpful for the inter-firm, intra-firm comparison. This is very important discussion. Here, what do you mean by inter-firm? A firm may compare its performance with that of other firms or with the industry standards in general. Maybe the same scenario of the same company. Whatever the same company, we can other our opposite company or competition company. Okay, that's what inter-firm. So it is also called cross-sectional analysis. The other name is called cross-sectional analysis. That is it is called inter-firm comparison. Okay. Then intra-firm. It is the performance of different units belonging to the same firm. Okay. The same firm for different department. Okay. To be compared. That's what it is called intra-firm within the firm. It is also called time series. Okay. So here it is called cross-sectional analysis. Here time series analysis. That is very important for accounting ratio. The intra-firm comparison very important. Okay, based upon them, company will take maybe the weakness or remedial action. Here you see again once again your financial statement you can analyze. Then we can simplify. Okay, here one of the tool. Here we can simplify. Here we can assess the operating efficiency. Then you can forecasting. These are the keyword locating the weakness or weak areas. Okay, then comparison. These are the keyword. Two, you can easily identify, you can easily memorable for advantages of ratio analysis. So it's very important. Okay.